Monday, March 20th, 2023, Monaco 64, home of alternative economics and contrarian views. So it's Groundhog Day again. Yes, Punxsutawney Phil and all that. But this time it's the Federal Reserve and all the major central banks. They've done exactly the same thing they did exactly 3 years ago. And we're going to look into that today. Before I start, I like to let you know that my precious metals partners out there are prepared to serve you, especially in these turbulent times where no one knows whether their funds really, it's not really money, are going to be safe in the banks. So yes, check them out below in the description. I've got Miles Franklin and ITM Trading, my affiliates in North America, and here in the UK, Gold Investments, and also Glint here in the UK, and Glint also, you can use them in the US. Glint is a bit different, of course. They hold your gold in a private Brinks vault in Switzerland, and your gold is in an allocated account, and you can also spend it if you wish to. And there's the Glint app as well. So yeah, that was a very good movie. I've watched it several times. Groundhog Day, Punxsutawney Phil. And of course, I think Groundhog Day is in February. But this time it's March 19th. Yes. And why is that? Well, yesterday, everyone really that follows things like we do, the central banks, the whole financial monetary system, we're waiting for the Swiss government to come out and announce what they're doing vis-a-vis Credit Suisse. And they came out at a press conference, which I watched actually at 7:30 p.m. Swiss time, which is 6:30 p.m. London time. And basically they help backstop really the Swiss government with 100 billion francs that they've allocated to the Swiss National Bank. Yeah, they backstopped this takeover of Credit Suisse by UBS, and UBS paid $3.25 billion for Credit Suisse. But they've had to circumvent the rule of law in Switzerland, because usually it would take 6 weeks for such a merger to be engineered. So nothing's really settled. And right after that, the Federal Reserve, March 19th, yesterday, announced that they're reopening daily swap lines. So here's the announcement. March 19th, 2023, coordinated central bank action to enhance the provision of US dollar liquidity. So it says here, the Bank of Canada, the Bank of England, the Bank of Japan, the European Central Bank, the Federal Reserve, and the Swiss National Bank are today announcing a coordinated action to enhance the provision of liquidity via the standing US dollar liquidity swap line arrangements. To improve the swap line's effectiveness in providing US dollar funding, the central banks currently offering US dollar operations have agreed to increase the frequency of 7-day maturity operations from weekly to daily. These operations will commence Monday, March 20th, and will continue at least through the end of April. So there you go. They're panicking. And why do I think they're panicking? Well, because Credit Suisse has a huge derivatives exposure, and we've spoken many times, or I have spoken many times, about the derivatives time bomb and how no one really knows the amount of derivatives these banks have. And why is that? Well, because they're off balance sheet, they're traded over the counter, so there's no public information about them. It's in the trillions or hundreds of trillions, not UBS per se, but the whole OTC derivatives. Some people argue that it's even a quadrillion. So if one of the major banks, the too big to fail banks, goes under, the whole derivatives time bomb could go off and the whole system would implode. And I think that's what's happening. That happened in 2008 when Lehman collapsed. They had to come in and bail everything out. So why is it Groundhog Day? Well, here we go. Press release, March 19th, 2020. Federal Reserve announces the establishment of temporary US dollar liquidity arrangements with other central banks. The Federal Reserve on Thursday announced the establishment of temporary US dollar liquidity arrangements, swap lines, with the Reserve Bank of Australia, Banco Central do Brazil, the Denmark's National Bank, and so on. So now it's just the so-called NATO countries. There's just a major central bank, so it looks like it's a derivatives problem to me. Back then it was probably a derivatives problem as well, but even more because of the lockdowns that they engineered. It wasn't because of COVID, in my opinion. It's because of lockdowns. But what was happening back in March 2020? Well, the Dow was crashing. The Treasury market was very volatile. The government bond market. Gold had gone from I think around 1750 to 1450. Yes, the dollar was very strong. But all of a sudden, things started reversing. And what else happened around that period? Well, the Fed started cutting rates, and it cut it almost to zero basically by May. And then you can see also that the Fed, let's see, the balance sheet March 11th was at 4.3 trillion. And then by June 17th, it was at 7 trillion. By May 2022, it was almost at 9 trillion. So the Fed is panicking and the other central banks are panicking. Of course, they're not going to say that. I read the Fed Whisperer yesterday, the guy from the Wall Street Journal. I think his name is Nick Tiriamos. He said this is just a normal operation by the Fed. Yeah, right, Nick. So the market last night when it opened, and it opens at usually 11 p.m. London, but now with the time anomaly for the next week still, it opened at 10 or I think 6 p.m. New York. Yeah, stock market did very well. Gold got hit, but as we speak now, things have turned around a little bit. And I think the markets smell panic. And I think the next step will be, they're going to start cutting rates. Yes, the Fed does meet in a few days' time. On March 22nd, they're expected to raise rates. I don't think they will raise rates. I think they're going to cut rates. And eventually they're going to announce mega QE, not just the Fed, but all the other central banks. And so with that, let's quickly look at where the markets are. Look at where Credit Suisse is as well, because that's very important. So right now, spot gold is actually trading at 2,000. The high has been 2010. And the low overnight, right off the bat, gold did go up a little bit, I think, on the open, but then they sold it off. The low is 1968. So expect a lot of volatility, but do you really not want to hold any gold and silver, at least a little bit in these times of trouble? I mean, I'm not saying you should, but I feel a lot more comfortable with it. And unfortunately, I still have to hold a bit of cash in the bank for expenses and taxes. But I'm thinking of maybe taking some more out or buying some more gold and silver, which I have been doing the last 6 weeks. And of course, most of you know I've been stacking since 2002 because I could see this coming. Yes, it's taken a long time, but patience is really something important, I would say. So let's continue here. We've got spot silver down 6 cents at 22.53. Low has been 22.21, the high 22.89. So here we go. You would have thought, oh, the Fed is going to open swap lines. The Swiss government has backstopped a takeover of Credit Suisse. Everything is fine. But I tweeted this picture out yesterday. And these are the Swiss bankers and regulators and politicians meeting at the press conference to announce the deal last night. And they look pretty worried to me, pretty nervous. So we're not out of the woods. It's all about faith and confidence, as I've said a lot of times. So the Dow future right now is down 250 points at 31,600. It has been as far down as 31,430. So yeah, the market has been all over the place. It's been as high as 32,084. So all over the place. It's said very volatile, down just under 1%. The Nasdaq is down 58, 0.5%, and the S&P is at 3886, down 0.75%. So last time they announced the swap line in March 2020, I remember the pound had dropped sharply to around 114, and then all of a sudden the pound started rebounding in the other currencies, so the dollar weakened. But right now, we're not seeing much of a move here. The pound is actually up slightly at 121.97, less than 0.2%. The euro is virtually unchanged, 106.60, and the dollar is down 0.2% versus the yen at 130.90. The dollar is up slightly versus the Swiss franc at 92.76. Excuse me. And the dollar is unchanged versus the Chinese yuan at 688.94. Let's have a look at where Credit Suisse is this morning. Credit Suisse, wow, it's trading at 67 cents. I think that's pretty much what UBS valued it at and what UBS paid for it. So it's down 63%. So not surprising. What else have we got? Some of the other currencies. Aussie dollar is unchanged, 66.94. Dollar is down 0.2 versus the Canadian dollar, 137.09. And the Kiwi dollar is down slightly at 62.58. So to the commodities, platinum is down $10, around $9.70. So it's down about 1%. We've got WTI crude down 2.7% at 65.11. Brent is down 2.6 at 71. And high-grade copper is up 0.2 at 3.90. So gold seems to be the only commodity that is up right now, mainly because it's a monetary commodity, really. Silver is almost unchanged because it's kind of a hybrid, I would say. So let's quickly look at the bond markets. The 10-year yield right now is down almost 8 basis points at 323. The 2-year is down 17 basis points at 368. And the 3-month, the 3 months is at 456, which is pretty much where the Fed funds is right now. So we'll have to see what happens on March 22nd, which is, I think, Wednesday. I don't think the Fed's going to raise rates. And if they do, it will be the last time, and it will only be by 0.25%, I think. So there you go. Groundhog Day, exactly the same day, March 19th. Different year, of course, but yeah, things are going to get very interesting. And as Rafi Faber says, don't panic. If you already have your physical gold and silver, you should be okay. If you do have positions with stockbrokers, make sure they're not leveraged, and expect maybe to to see them frozen eventually if things really kick off. Who knows? But I noticed on Friday the miners did quite well, the gold and silver miners, despite the weakness in the stock market. I think more and more people are going to realize that the producing gold and silver miners, they're going to be the banks of the future. Yes, because they produce real money. What about the junior miners? Well, they're more looking looking for gold and silver before they start producing, or before they sell the properties to the bigger miners. Or sometimes they also start producing themselves, but it's very costly. So they're more speculative, I would say, the junior miners and the explorers. So with that, I'm going to wish you all a very good start to the week. Take care. Bye.